Hi, everybody. It is Monday, October 6th, 2025. We'll start with our headline. AMD dilution deal causes 23% rally intraday, as high as almost 30%. Mr. Market in hysteria. AMD hit the headlines today because of a deal between AMD and OpenAI. Less sophisticated investors probably saw that OpenAI, because they're taking a stake, they're going to be buying some of AMD stock. But when you look under the hood, like this article from Seeking Alpha says right here, AMD is now extending warrants to OpenAI that are tied to its own share price, effectively betting on its future stock performance as part of the business transaction. And as Reuters mentions, the deal includes warrant for OpenAI to buy 10% AMD stake at 1 cent per share. That's what a warrant is. It's kind of like an options contract agreement. And if this deal goes through, it looks like AMD will be suffering from a 10% dilution. So each share of the company representing only a 90% stake before this dilutes. So essentially, what I think had happened today with AMD is you had unsophisticated investors read the news and say, oh, I better jump into AMD stock. It drove it up. It looks like 37% on the open before closing 24% by the end of the day. Now, AMD is not a super tiny company. You can see it on the S&P 500 heat map. It's this little green box down here going up, it says right here, 23.7%. And even though NVIDIA, the largest one in this group, dropped by 1.11%, the semiconductor index was able to gain 2% as a whole. Hysteria like this was happening at the dot-com peak. Those of the investing community that were active during this period remember it well. Companies that are a third of $1 trillion in market cap moving by 23% in one day screams that Mr. Market is in complete hysteria mode at this point. I am in the camp that a Black Monday, if it had occurred today, it would not be surprising to me. It would make sense. It would suggest that things are going back to some kind of normal valuation. One third of $1 trillion company should not be moving by 23 to 37% in one day. That is just absolute insanity. It's acting like it's a meme stock. It's acting like it's a meme cryptocurrency. It's acting like a penny stock. This is not healthy. This is dangerous. And as much as Black Monday did not occur today, well, hey, maybe it'll be Black Tuesday, which leads us into our community topics. No Black Monday. Sorry, guys. My crystal ball must have a little bit of dirt on it or something. Maybe it'll be a Black Tuesday tomorrow. That said, topping tails are still intact. Just to review, a topping tail is a body of a candle with a wick that goes way up and then comes back down. So the bulls tried to buy it higher and they got beat back down. That is a very negative thing for the bulls, so much so that it often acts as the top. And as I talked about on this weekend's show, Friday's candle did have a topping tail at an all-time closing high, suggesting that it is a powerful signal. And until we get an actual closing candle above 65.50 in the SPX, this remains valid and suggests that the probabilities favor downside not only in the SPX but equally in the RSP equal weighted index, with an even more pronounced topping tail candle, and also same exact thing in the IWM, the Russell 2000, even maybe of a stronger topping tail at an all-time high. This is an all-time high candle here until today. Well, today's close was all-time high, but we didn't get a close above the wick of Friday's candle. This is bearish. So although we did not get a Black Monday, maybe the turnaround Tuesday will prove to be there. these topping tails are currently still intact. Coming up, don't forget, guys, we are still in a situation where the federal government is shut down, and so our main and most important economic data is in limbo. We are no longer getting initial continued jobless claims, which I have been watching like a hawk every Thursday up until this past week when we didn't get that report, and we didn't get Friday's unemployment report. And we will be waiting on this data until the government decides that they can agree how they're going to spend money moving forward. I'm hearing how a lot of federal employees have to work without getting their paychecks, except for Congress, of course. But anyway, the other thing coming up is, of course, tariff updates. Thank you for watching, liking, subscribing, commenting, and supporting Robschild. No changes to the crystal ball ratings. And see my website, link in the description to read through my daily reminders, current macro views, portfolio explained, and stock research center. On to the charts, starting back with the S&P 500. Just another reminder that we are in a consolidating wedge here, and if we do get a large move to the downside off of this topping tail and break this little yellow line here, the floor for most chartists is a lot lower from here. This could really be the end. And with that said, I always need to make sure to take a step back and say, you know what? I can't control what other people do with their money. If people continue to put their money into the S&P 500 at these levels, if they continue to buy AMD stock or whatever stock pops into the news tomorrow and sends the markets higher, I can't control that, no matter how much it doesn't make any sense to me. I suspect this is the high, though. But remember, just a guy with a crystal ball, as always. Next up, Bitcoin has been going up. We hit an intraday high today of 126,272, a little bit below the trend line I was looking for to connect these two previous highs. Looks like that's off a little bit. I still am looking to short if we hit this line. I am in a short of Bitcoin. I got in at the orange line again here with a very, very small amount. I said I would quadruple it at this level, which I still am planning to do. Next, the U.S. 10-year Treasury note yield did rise by about 4 basis points today, essentially hitting this purple line here that's been intact for, since July. When we do break to the downside below this previous yellow line from April 4th's bottom connecting to September 17th's bottom, some chartists are looking to get down to this 3.6% level on a confluence of trend lines. But I also want to point out, if we do break below, at this point, 3.85%, that triggers, for me, this very large head and shoulders top that has been developing since August of 2022. And if this were to play out the way head and shoulders typically do play out, it may send the 10-year note yield as low in my book as 2.25%. I don't think I'll be holding TLT all the way to that level, even though I think it's still probably in the cards with everything going on. I think 3.6% is a more fair valuation. It represents, by the way, again, a PE ratio of 28, 3.6%. So 1 divided by 100 is, 1 divided by 28 is 3.6%, which the S&P 500 is around 30 right now, actually. So I think it would be a reasonable place to get to. One thing continuing to support the idea that yields will be falling is crude oil not looking very strong at all. After breaking to the downside, sort of looking like we're retesting that line right now. This chart appears to be bearish. It seems to me crude oil looks like it will be heading lower from here. Obligatory mention of gold rising 1.9% today. Unbelievable. Right now, as I'm recording, it looks like the all-time high got to 3,976. congrats to everybody that has gold to sell at this an unbelievably high price. I keep repeating the same stuff over and again, and I'm sick of hearing myself say it at this point, but gold has never been more expensive when you compare it to housing crude oil or copper, making gold, in my book, in a bubble right now, and I think it will plunge, and when it does, it'll go down fast. But a lot of people are now looking for 5,000. Speaking of hysteria in markets, total to all crypto minus Bitcoin hit an intraday all-time high today. What do you think, Drakmar? Should we start a Drakmar coin? After all, we've been living in an environment over the past 5 years that has proven over and over again the higher risk that you take, the more money you make. As much as it's not safe, it feels tempting, right? It's worth mentioning again the volatility of bonds represented in the MOVE index is still at lows, a lows area that hasn't been seen since 2021, suggesting maybe bonds are setting up a bullish move. It would make sense to me. Also, another reminder, the 5-year break-even inflation rate and 10-year break-even inflation rate have been finding lower highs and lower lows. This is not screaming, hey, we're worried about inflation. This is the market to look at when looking at what the market is doing for pricing inflation. It's not gold, it's the break-evens. I would trust gold more personally to keep going higher if this was getting out of control to the upside, and it's not. So that still makes me say that gold has its days numbered. And last chart of today, I got this from another YouTuber's channel. He brought up the 10-year minus 2-year, and he mentioned that, the number that you typically get to when you're going into recessions, the 10-year minus 2-year is 0.5, and we have been there. We've been basically at 0.5 since April. And he's right. Since, going through, I usually use the 10-year minus 3 month because that's a little bit more like, as soon as we get, going up below from 0 to above 0, that's typically when we've seen recessions come really soon after. But one thing that the 10-year minus 2-year can do is the 2-year, it smooths out the course of expected Fed funds rate. So the 3-month is only looking at the next 3 months. The 2 years is looking at what are the cuts looking like, what are they pricing in over the next 2 years. And so it's a little sturdier. And it is interesting that, all these recessions, as soon as we get to that, he says 0.5% spread in the 10-year minus 2-year, that's the trigger. And there's been times where, we kind of spiked up to there like in 1998 and then went straight back down. But, going at that level and going higher is, so he thinks that we are going straight into a recession. In fact, his stuff is so good and well organized that I can't help promote him on my channel. He has a video here called "We Are Entering a Recession: Rate Cuts, Job, Government, Economic Shutdown Update, 1st of October." If you like my content, I recommend that you check him out as well. Financial Freedom 101 is his channel. Anyway, I hope that helps, and that's all from me and my crystal ball. Look out for that Black Tuesday tomorrow, and see you next time. Robschild.